Happy Monday, everybody, and thanks for checking into the TDR Trade Black podcast. I'm your host, Shad Dales, off to a fresh new week. Lots to dive into, lots to talk about in the podcast here today, including an announcement this morning. The Cannabis Company Holdings announces they are exiting the state of Florida. Anthony will give his take on that and whether or not it was a smart move. A lot of people actually liking the decision. In addition to that, we'll have Anthony Cogniglio on. We're going to talk about cannabis lenders versus cannabis borrowers and how these stocks have been performing between the two since the beginning of January. And you'll be surprised as to how well lenders are outperforming borrowers. And in addition to that, NewLake Capital announces yet another raise to their dividend. And finally, why a lot of you here today as well, Raj Grover, CEO of HITI, will join us to talk about their latest earnings and what this company is positioned to do moving forward. So let's welcome in TDR co-host Anthony Varrell here on a Monday. Good to see you. How are things?
It's good. It's been an eventful day. Got the newsletter out this morning, and then all of these headlines started rifling off one after the other at 8 o'clock. And then there was actually some positive green numbers on my screen for the first time in a couple of weeks. So,
yeah,
I mean, it's good. We'll see if there's follow through tomorrow.
Yeah, we were hoping to have Dan Aarons on, but this is of all days not to have him on. We should have him on, judging by the way things have been moving. But regardless, we'll have him on again later this week. But most importantly, there's some really, really good announcements this morning. So let's begin with the Cannabis Company Holdings, who announced this morning that they plan to establish a smaller, more efficient run business. Both David Hart, the CEO, and Jesse Channon, the president, have indicated kind of a restructuring of the way this vision of this company, and it looks like it's well underway, Anthony. In a lot of ways, they announced, like I said, they've exited the Florida market here this morning. How do you view this announcement? Do you think this is a good move based on a lot of the strategy that they've communicated to us recently?
I mean, I think it's a great long-term move. I think it's a short headline that people are going to get caught up in and think of it as a net negative. But I mean, if you listen to Jesse and David when they came on after their earnings report, and we were talking about what they needed to do to right this ship and, I mean, leave their imprint on the company, this had to be done. I mean, the Cannabist had 14 dispensaries in Florida. They were underperforming. They were not anywhere near selling through the velocity of their peers. It was a drag on the portfolio. I mean, these assets needed to be jettisoned. The contrary to this is, what are they going to do? Spend 20 to 30 million in CapEx in this market over the next 2 to 3 years to try and compete with the likes of Move and with the likes of Air and with Kim's behemoth at Trulieve? Like, this just wasn't a good market for them. Kudos to them. I'm happy to see it. They can now focus on their Northeast footprint that is dialed in, and a lot of those markets are ready to go to flip to adult use. And I mean, I can't really think of a reason not to like this move other than the knee-jerk reaction to the headline.
Big competitive market, as we've indicated, big upside potential for those that are playing in it. However, they're exiting, but these are some interesting assets that they do have. Like, how valuable do you think these assets are, knowing that there's a lot of companies that do want to jump into this market?
Yeah, so there's from my understanding, there's 3 cultivation sites, 14 dispensaries. And I mean, that's a formidable footprint. I mean, this morning I comped it. I threw a number out there somewhere between 25 to 40 million based off of the VidaCann acquisition. I mean, after thinking about that acquisition was not all cash. That acquisition was a combination of stock and cash, which can obviously juice the number that goes into that. I mean, I'm just guessing here back of the napkin, if it's an all cash deal or a heavy cash deal. Somewhere between the 10 to 25 range. But I'm also just guessing. I mean, we only got the press release this morning announcing the divestiture of those assets led by ATB. I'm sure we'll get a follow-through press release upon something closing to where we get the actual details around the deal. But I mean, this is good. This is a capital infusion for the company to focus on markets like Ohio, markets like Virginia, markets like Pennsylvania, and go deeper in that core in the Northeast that they have.
Yeah, important to note too that a lot of these licenses that are pre-adult use have big values to them. So you bring up Virginia, you bring up Pennsylvania, but all eyes, as I said, top 4 player that they're predicting for the market of Ohio. So those are some immediate turns, but all eyes and focus will be on that. But for those that want to learn more, we're actually going to have the CEO, David Hart, and President Jesse Channon. That's going to be posted tomorrow at 4 o'clock. We're going to have a conversation with them, I should say, tomorrow morning, and we'll post that tomorrow afternoon. So any questions that you guys want us to ask them, let us know now, but we will be posting that. And again, having that conversation tomorrow morning and posting that tomorrow afternoon. But all in all, like even Canaccord gave it a buy rating this morning of $1. I noticed this morning through their analyst Matt Bottomley. So I think for the most part, some people are looking at this as long-term a positive decision.
Yeah, I mean, the business unit was operating at a loss. I mean, we can go do add backs and we can massage the numbers to where, I mean, this is technically accretive, jettisoning off these assets. It's like I said, I think it's a net positive. And also, like you had harped on with the valuation of the licenses, I mean, the last license that I think traded in Florida a couple of weeks back was in the neighborhood of $6 million.
Right.
The height of this market, the piece of paper itself sold for $68 million, if I'm not mistaken, which is the Florida license that Acreage bought and then sold. But there's a lot of there's diminishing returns in these licenses as the markets mature. Florida is about to have more licenses come onto the market. And then with the adult use conversion, you're probably going to take a hit as well. I mean, this was a good time to get out. They were going to do it. The writing was on the wall. And I mean, this really shouldn't surprise you if you were listening to what Jesse and David were talking about and understand the business and understood the footprint. The last thing I'd want to see is them have to invest 8 figures into this market. And that's not even a guarantee that they're going to be able to compete. This was a good move overall, and we'll get much more deeper into it with them tomorrow morning.
I think it was 5% of their revenue comes from the Florida market as well. So that's worth noting, but lower the cash burn, get valuable assets, and then focus on the things that you do well. But one thing that we've learned from a lot of executives in this space, that if you're going to make a decision, maybe make it fast in this space, which I think a lot of, you got to pivot through the times. And this industry, you can't be sleeping. And clearly, as what they've indicated to us in the past, as far as looking at this and having a new vision for the company, it's well underway. So we'll have more of those details, as I said, tomorrow in our discussion. TDR Trade Black podcast, Monday afternoon. Anthony Varrell on with myself, Shad Dales. Into the wire as we go into our second topic of the day. We switch news now to Verano Holdings, who announced this morning authorization to repurchase up to $50 million worth of stock. Anthony, this is encouraging. However, do you think an announcement like this moves the needle?
I don't know if it moves the needle. I think it's a good I think it's a good headline. I mean, the authorization to buy up to $50 million of their stock. I mean, as far as they're concerned, and as far as a lot of these guys are concerned, I mean, that's one tax refund from the government, which is probably some of the calculus that's in here. Anticipating getting money back from tax refunds, as well as not having to pay 280E.
Yes.
That's that frees up cash to be able to execute programs like this. I mean, their stock has gotten beat up enough. I mean, I'm glad to see that they've kind of pulled this lever, announced the program. I think it's authorized until June 2025. And we'll be able to see on the earnings reports how that program is progressing in terms of them actually buying back the paper.
Nice. Later this week, we're actually going to post a video on Verano. 7 things to know about Verano Holdings. We actually did one last night on Terracin. So if you haven't gotten a chance, make sure to go to our YouTube channel, look at our small cap playlist. And on Small Cap Sundays, myself, along with our analyst, Bill McNarland, we outline 7 things. We actually will post that tomorrow as well to know about Terracin right now. So some helpful information about that company moving forward, along with Verano later this week. Jungle Java, good to see you here on a Monday afternoon. I agree. The Cannabis putting their plan into action. I'll let Jesse know that you say hello, but yes, appreciate the feedback. And lots going on. Regulation government has broken 20,000 comments.
So that's kind of
20,000, Christopher.
So that's kind of crazy, considering I wrote about the comments this morning, and it was at 18,600. That's almost an 8% uptick just from today.
Wonder why.
That's picking up pretty quickly.
Ace Invest writes, Consortium buying those assets? One can only know or wonder. But
yeah, I mean, there's no point. I mean,
we're not.
My Twitter feed was lit up. My Twitter feed was lit up today on who's buying the assets. Is it Terrascend? Is it Ascend? Is it Sunburn? We'll know in due time. And then we have no idea who's purchasing those assets as of right now.
Yeah. Coming up, as I said earlier, we're going to have the CEO of High Tide, Raj Grover, on to talk about their latest earnings. Lots to dive into and lots to learn, as this company definitely reported some strong earnings again and reported some net income, which is huge because we all know cash flow is the lifeline of any company. So positive move and announcement that they made. Let's now move into topic number 3, into the wire. Interesting one. There's a chart that Viridian Capital Advisors published today involving a chart comparison of cannabis lenders versus cannabis borrowers on how they perform year to date. And cannabis lenders are leading the way. So saying that, we wanted to bring in the CEO of NewLake Capital, Anthony Cogniglio. NewLake Capital trades on the OTC under the ticker symbol NLCP. Where are you, Mr. Cogniglio? You're in New Jersey at the Bazanga conference, aren't you?
Yes. Greetings from New Brunswick, New Jersey. How are you all doing today?
How is it? What's the big takeaway from the conference there today? Some notable names attending?
Good. Yes. So, notable names, some of the larger MSOs that are in the state, as well as some of the smaller state operators. It's been a terrific conversation. Actually, I've been hearing conversations about some of the larger companies that are looking to grow their presence, but also hearing conversations about some folks that aren't in the state looking to get into the state. So some positive things ahead from New Jersey.
Is there any notable things, just concerns or questions that hover around the market right now that was brought up today that we should know about?
I'd say it's what we've heard in other markets. When will the social equity program really have an impact on its targeted audience? Yeah. And when will we be able to see more dispensaries rolled out so we can get a broader program, deeper penetration? And probably the biggest issue for that is the number of cities in New Jersey that have said no to having cannabis in their communities. They've opted out. And so it's about getting more of these communities to opt in so you can grow that dispensary footprint and have a broader, more sustainable market.
Interesting.
So I don't know if you know this, but I kind of just a light bulb went off. If once they opt out, can they opt back in, or is that process pretty arduous to do?
I don't know the process to opt in, but yes, you can typically opt back in at some point in the future. And what we often find is in states that are adopting and giving the cities the optionality to opt in or out, the cities will opt out and they'll observe the marketplace. And I kind of understand it, right? They want to see how the regulated market evolves, and then they'll make a decision if they want to participate or not.
Yeah, that makes sense. Because there was 58 cities in Ohio that actually opted out of adult use ahead of the conversion.
Well, let's see how this. Yeah. As I said off the top, I wanted to have you on an interesting chart that Viridian Capital Advisors posted this morning about how lenders are outperforming borrowers this year. So in your opinion, why do you think that is?
Yeah, well, I think the fundamentals of our business, whether you're a sale leaseback REIT like us or a lender like some of the other REITs that are out there, the publicly traded REITs, our cash flows are more fundamental to the collection of, in their case, interest or in our case, rent. And so you put in place transactions, and for our portfolio, we have 14 years of remaining average weighted average remaining lease term. It's been a long day. And so we're looking to collect rent, and having collected 100% of rent, we're 100% rented in our portfolio. As you collect that rent and you do more deals, you're able to grow your business. So it's a little bit more of slow and steady wins the race. We have less variability quarter to quarter due to, say, seasonal factors, or 420 isn't an issue necessarily for our business. It is for the tenants and for the operators in the sector.
Makes sense. Go ahead, Anthony.
I was going to say, I think you forgot the most important part is the dividend. Might as well, which you guys just raised. I know it was 42 cents a share that it was raised.
We went to 43 cents a share.
43 cents a share that you guys raised to. So I mean, you guys have done that 3 consecutive quarters in a row. Now, how is that a testament to the portfolio's strength? Are you seeing just increased free cash flow? I mean, walk me through that. How do you keep raising it?
Yeah, so we get growth from 3 areas in our portfolio. The first is within our portfolio, we have annual escalators. So every year there are rental increases. It's very, very common across the real estate world and just about every lease you have. And so ours are structured to have annual increases. So that's 2.6% across the portfolio. So every year our revenue will grow as long as we're collecting rent by 2.6%. Number 2 is we have a number of commitments that we've made over the course of the last 2 years. And as those projects are completed, and we currently have 2 projects coming to completion, one in Missouri and another one in Arizona. We have a little bit of TI for a property in Pennsylvania. As we put capital out, we charge rent on that incremental capital. And so that's another addition to cash flow earnings for us as a REIT. It's AFFO. And so that grows. And then we have new transactions. And we did announce a new transaction in May. Now that's not in, that wasn't baked into a full first quarter numbers, but it is going to start to bleed into our second quarter numbers. So it was around mid-May that we announced a $16 million deal with C3. And so that's yet more growth into the portfolio. And then obviously we'll look to do more transactions and continue to add to the revenue in the AFFO.
Have you had any conversations with regulators about uplisting ahead of rescheduling? I mean, I know that's been one thing that we've all talked about is getting NLCP uplisted onto a major exchange.
Yes, it's critically important for our investors and for us as well. And we have talked to both exchanges and we have continued dialogue with them. You know, unfortunately for you guys and for anybody listening, I'm more negative on this. And I don't think anybody should be investing in anybody in this sector with the expectation that we'll see an uplisting anytime soon. At least for us, what we like to say is for those that want to get paid a dividend, you could get a 9 or a 10% dividend yield from our stock while you're waiting for that uplisting, while you're waiting for that catalyst. And so we have a couple of paths we're looking at, but unfortunately, I don't think rescheduling does it for New York or NASDAQ. I don't think a Cole Memo 2 does it for New York or NASDAQ. And in fact, safer banking is currently written, I don't think does it for NASDAQ. So we're going to need a safe harbor, or we're going to need a lot of additional action to happen to get the exchanges comfortable, is my opinion.
And that is one of the best arguments as per why people are choosing the lenders over the borrowers. Why not get paid to be holding the equity in the time of uncertainty? You couldn't have made a stronger case, because everything that you just said, we've heard contrary all over the place in this sector.
Yes. And when you think about the portfolios and coming through the last 18 months, we had one of our directors 18 months ago say we were going into the nuclear winter for cannabis. And it was a really, really difficult time for the industry. But I think investors can now look at a portfolio, look at how a management team like ourselves deals with any issues that occur. And they can make an assessment about, do they think those cash flows are going to be there? And when it comes to the dividend, ultimately, you want to make sure the company can continue paying the dividend. In the first quarter, we had a 79% payout ratio. That means that we could lose 20% of our revenues and we could still make the dividend. Now, we certainly don't expect to lose that kind of revenue, but it's a well-covered dividend. So as we grow our revenue and our AFFO, and we have that well-covered dividend, we can very comfortably increase the dividend the way our board did last week.
Yeah. I know this is something you don't look at, but don't look now, but you're up almost 25% on the year as far as your share price. So it's performed well, and people are noticing obviously the improvement. And, that's obviously a telling sign. But to Anthony's point, you want to play the cannabis space, avoid the volatility. You get a dividend, a climbing share price, and really you get paid doing it, obviously with the dividend and the increase that you just outlined. So kudos to you. And I guess that's, as you said, a great reason why lenders are outperforming borrowers right now. And a strong year so far, something that you just don't hear about a lot when it comes to share prices within this industry.
Yeah, we're happy with the performance thus far. We were down a lot last year. And in fact, similar to Verano, we did a buyback last year. The average price at which we bought back stock was $13 a share. And so I haven't seen at all what's happening with our stock price today. But last I saw, it was close to $20. It's a pretty accretive buyback. We certainly wanted to preserve capital to be able to do deals. And we have $86 million of available capacity to continue to put out more deals. But sometimes you have to do this. And, one quick comment I'd like to make on your Cannabis and Verano stories from off the top. Is I know a lot of people focus on the industry day to day, and they're looking for these news items day to day. But really what we heard today is endemic of not endemic, but is an example of what happens behind the scenes every single day at these companies, right? These operators are not sitting still. They're thinking about how do they rationalize their business? How do they improve their cash flow? And I recently wrote an op-ed about the hard work that's been done over the last 9 to 12 months. And I don't think these operators are getting enough credit about making the moves necessary to be able to pay down debt, improve the free cash flow of their business. It's hard work, and they're hard decisions. Taking out $10 million of expenses at Cannabist isn't about cutting back on the post-its. That's hard decisions for people who are sitting to the left and to the right of you. And, those are hard. And kudos to the management teams for making those hard decisions.
Yeah, I'm glad you said that, because I don't think people don't really take those data points into much consideration from a weighting standpoint. I mean, there's a lot of very, very difficult decisions that need to be made to cut out $10 million in costs on an annual basis at a company of that size.
Yeah.
It's also a testament to the companies that are paying down debt, because operating in this industry that we're in right now while paying down 8-9 figures in debt is a gargantuan task, and it's a testament to the management team for managing cash flows and managing the overall enterprises.
Yeah.
So you liked the announcement from this morning, the Cannabis announced?
I do. I think it's important for companies to know what they're good at and where they want to focus. Anthony, I agree with all of the comments you made earlier, which is right now is a time of focusing on your core. Right? We hear Cresco talking about focusing on the core. We hear Kim Rivers talking about focusing on Florida. And so I think it's a natural extension of that thesis to say that Cannabist is making the decisions of where they have a position of strength and where they want to focus their management effort. And you're right. People won't look at it, Anthony, as an accretive move, but to go from $2.5 million cash flow drain, which I think was the number they put out there, to being able to redeploy that cash into a market, let's say Ohio or even Virginia, is going to be actually fairly accretive at the end of the day. And so again, hard decisions, and kudos to the team for doing it.
Well, listen,
and I mean,
go ahead, Anthony.
I was going to say too, people also need to take a history lesson in this sector and understand the conditions that a lot of these MSOs were built on. I mean, the Cannabist and Columbia Care was coming at a time where companies had to grow and put out a press release and plant a flag in a market to then go raise capital and keep that flywheel perpetuating. The Cannabist listed Columbia Care. I'm pretty sure they listed at a $2.1 billion valuation when they came out of the gate. That's what kind of market we were in, and look at where we are now. Fundamentally, you have to be almost a historian in this space to keep a level head and actually understand the playing field of what's going on. The fact that they're now right-sizing it and going into that Northeast footprint, and they can make these hard decisions, is a testament in itself.
Yep. Agreed.
Well, listen, thanks for the update regarding what's going on in New Jersey at the Benzinga conference. Tell the crew we say hello, Jason, Elliot, Patrick, good guys. And congrats, obviously. I don't know if congrats, but great work, obviously, on the announcement regarding the increase in your dividend. But getting lots of love from all the people here. They think you're pretty sharp, and Jungle Job appreciates, but she likes the Anthony 2.0, both you guys on. So
awesome.
Maybe in your next
great seeing you guys.
Yeah, appreciate it. Let's keep in touch, okay?
Sounds good. Thanks for having me, fellas.
All right. Good guy, to say the least.
He's one of my favorite. He's one of my favorite guys.
We've learned a lot.
He gets it. He gets the sector a lot more than most.
Yeah, he's taught me a lot. I think since we started doing a lot of work with him, and a lot of the interviews that we started. I think it was last October. But good guy. We met him last year actually with Rob Seacrest down in New York City when they were at the New York Stock Exchange. But good times, to say the least. All right, it's now time for our last segment, and just in a moment we're going to have the CEO of High Tide on, Raj Grover. Before we do that, who knows the High Tide story better than anyone? Let's welcome in. It's not Friday, it's Monday. Let's welcome in Guap. Good to see you. How are things?
Happy Monday, Barnacles out there. Good to see you, Shad and Anthony. I know we're both waiting for our respective sports teams, Celtics and Panthers, to finally clean things up and take it in 5, but we can't talk about sports.
No, Panthers in 5. Oilers are going to get annihilated tomorrow after that last game.
It was pretty embarrassing for both squads. Let's be honest.
I will be in Toronto watching the game with my Panthers jersey on.
There you go.
Cool.
I've sent the email over to Mr. Grover. He's supposed to be logging on, so I've yet to have him log on. So we got to kill some time. But
so let's do Sports Center.
Let's go over.
No, but I mean, on a serious note, I mean, Dank, who I actually respect his opinion a lot, says that he wants to rebalance a portion of his portfolio into dividend stocks like a boomer.
Yeah.
I implore you to go look at the fundamentals and look at the businesses that have been built with NewLake Capital, IPR, AFC Gamma, Refi. I mean, if you believe in this sector, having leverage to the lenders that are essentially growing all of the infrastructure, if you believe in the future cash flows of the businesses or the opcos being TrueLeave, GTI, Verano, etc., I mean, you damn well should have a sleep at night knowing that the portfolios that the REITs and the lenders in this space are building are just as sound, and they pay a dividend. You're not going to get that explosive parabolic growth in the stocks. But if you look at AC stock, it's gone from 13 to 20, steadily marching as the sector's grown and the volatility is not there. So you're not going to be pissed off all the time.
What's
and
that?
You're going to be getting a nice yield on your money.
And what's that say about the future of the industry if they're thriving, right?
Yeah, absolutely.
All right, guess what? We've got our guest of the day, and it is none other than the CEO of HITI, Raj Grover. Good to see you, my friend. How are things?
I don't hear you guys. 1 second.
Yeah, no worries.
Don't hear them. Okay.
We got you on standby, my friend. But yeah, we've got some great highlight numbers. For those wondering as well, we are going to be in Toronto this week. Anthony and I, we're going to be down at the Canna Cabana, one of their signature locations down on Parliament Street, a big flagship dispensary in that market as they start to build more and more of a bigger footprint in the Ontario market. But we will be down there and we will post that content later this week. Raj, can you hear me now? Nope, still waiting. We'll get that figured out. Just 1 second. But anyway, anybody got some comments or questions they want for Raj in just a moment? Let us know. Leave the comments below. Anything else that we want to go over as far as questions or comments? Andrew Russell writes, the Prince of Prince George, Josh Kelly, is in the house. Josh, good to see you. Andrew, appreciate it. Prince George, I assume that's out West Coast, BC. That's like way up there. But hey, love it. Glad you guys could log on. Else we've got...
I don't hear them.
Panthers in 5 and Celtics in 5.
I don't hear them.
I wrote that.
Did you write that, Guap? Oh, yeah.
Sorry, guys. Do you hear me?
We hear you. We hear you.
Oh, 1 second. I can't hear you. One
Okay.
second.
Okay.
Yeah, it's crazy.
Oh,
It's
yeah.
it's like the Pilgrims. The Pilgrims landed in the world capital of hockey and named it Florida. It's,
I'm looking forward.
Is it here?
I, for one, am looking forward to you visiting a Canna Cabana because I've never been, and I'm one of the more vocal shareholders of HITI, and all I've seen is pictures.
Can you hear us?
Hold on a second. I was just going to say, I just heard what Guap said about Canna Cabana. You're going to have to repeat that whole line, my friend. And I want to say hello again because I didn't hear a word you guys said. I was in the
You can hear us.
bathroom.
You can hear us now, though, my friend.
I can hear you clearly now. Clearly
Well,
now. And I'm excited to see you, Guap.
Let's start at the top. Raj Grover, CEO of HITI, which trades on the NASDAQ, HITI. Good to see you. Happy Monday. How are things?
Very, very good, Chad, Anthony, and our original Barnacle Guap. It is so good to be here. And Guap, I wasn't expecting you to be here.
We
I
had
got
to.
that nice pose with the boys, and you were missing, so I thought you were not coming. So good to see you, my friend, and good to see you both.
Raj,
Good
we
to see you,
actually
Raj.
learned something about your name today. I think in English, the full name, it means the king. Is that correct?
It means to rule. Raj means to rule, but it's close enough. It's
All
close
right.
enough.
We're doing our little bit of a homework. Listen, I know if there's anybody that knows this story better than anyone, I want to give him the spotlight. Guap, I know you're excited to get on with Raj, so go ahead and bring up any questions that you want to ask. But this is great with regards to your latest earnings.
Shad, I know you wanted to highlight some of those top line numbers before we get into it.
So why don't I do that? So
Yeah.
let's talk about this. So first quarter, or I should say, for the latest quarter, report 124.2 million in revenue. And for the first time, you reached a 12-month trailing revenue of over 500 million. Of that, 9.4 billion was positive free cash flow and 22.7 million over the past 4 quarters. And another important stat, which perhaps is the most important, you generated positive net income. Yes, it's a start. It's around 200 grand, but this is up from the negative 1.6 million year over year. So with that all said, you know, because we all know cash flow is the lifeline to any company. Is this the turning point? Would you say, like, you've done a lot of great things, but is this a turning point for HITI?
Chad, I wouldn't say this is the turning point. I think we came through that turning point a little while ago.
Okay.
This is our 4th consecutive quarter of free cash flow generation. If you average out the 4 quarters, we're averaging $5.7 million. This quarter was a home run with $9.4 million, but that can be lumpy given working capital consideration, so I cannot take all the credit for that. However, we have generated $5.7 million average free cash flow for the last 4 quarters. So our turning point happened a little while ago. We went from 3% market share prior to the launch of the discount club model to almost 11% today. Couldn't be more happier than that. Originally people said, Raj, we don't believe that somebody's going to pay for a membership to shop in cannabis stores. We proved them wrong. We have Elite today, which has grown at its fastest pace since inception for 3 quarters in a row now. So 226% year over year and 38% sequentially. So everything has been going in the right direction. It's been going in the right direction for quite some time, Shad.
Yeah.
So I wouldn't say this is the turning point.
Yeah. Okay. Guap, go ahead.
Yeah, so on the first time I got to interview you, I asked about your origin story. I'd really like to zoom out and have you just outline some of your business units within the High Tide umbrella, because it's not an MSO, it's not an LP. We know you're a retailer, but you've also got some other business units as well. I'd love to hear just you outline those so people at home can understand who might be new to the High Tide story.
I was just going to say, you can spell it out almost as good as I can. But for everybody else's sake,
yeah.
No, let me do that. You've done the honor of asking me the question, so let me do that. So we own Canna Cabana, which is the largest Canadian retail chain with 172 locations, and the second largest globally by store count. Only Trulieve is ahead of us with 200 stores as of yet. We also own and operate 3 of the top 5 consumption accessory platforms in the world, and 3 of the top tier CBD platforms, 2 in the US, 1 in the UK. And then we also, because of these platforms, we have 5 million total customers, including our Cabana Club members, which is now sitting at 1.43 million members, which was also up year over year by 38%. And very importantly, we have 3 million US customers that have been buying pipes, bongs, vapes, vaporizers, CBD products. Many of them are buying these products, obviously, to facilitate the use of cannabis. And we feel that we can convert these customers. So we've strategically positioned them, or we have them in our portfolio, and we can convert them upon a federal legalization event or a descheduling event, or in any event where NASDAQ allows us to indulge in plant-touching businesses. The strategic rationale, Bob, just to get a little bit more granular on why we have these 2 platforms. One, like I just mentioned, this existing customer base is very, very valuable. I don't think any of our MSO friends has this kind of large base of online customers across 50 US states. We do. And secondly, we strategically bought 6 of these businesses in 2021 when our stock price was, roaring. It was close to $9, $10 at the time. And we bought, these high margin, high EBITDA generating businesses. The gross margins back then were 70, 80% if you average them out. Today, they're still, 55% as per our last reported quarter. We bought these businesses for 2 reasons. One, so, we could use these margins because we have low margin business in Canada, our discount club model. We wanted to launch that in October. So we went, on a bit of an assault from June to November, buying these businesses, accumulating these margins, and starting price wars in Canada, which we knew nobody was able to compete with us, right? So we did that very, very successfully. And still, they're strategically positioned there. If someone wants to wake up one day and say, let me just mess with Raj or High Tide and, let us develop our own discount club model, well, I'll just go open up my portfolio even more and we'll get even more diversified. So it has a couple of different strategies baked into it, but this is why we have our main brick and mortar segment, which is roughly $460 million Canadian dollars in revenue, and the remaining is e-commerce platforms.
Yeah.
So you talk about growth. I know that you've jumped from single digits to double digits, sitting at about 11% market share right now. The goal is 15, if I'm not mistaken, to get to. Obviously, as you're growing this aggressively, other retailers in Canada are losing market share. I mean, how do you get to that 15% overall? And I mean, what kind of timeline should we be thinking about? Is it M&A? Is it organic growth as the competition just starts to phase out of the market? Like, how do you get to that 15% number?
Yeah, so Anthony, we just keep on doing what we're doing. Before we launched the discount club model, we were sitting at 3% total market share. In about 2.5 years, or almost 3 years now, we come from 3% to 11%. It's any retailer's dream. So we're going to do exactly what we are doing. We build our portfolio, which is 172 stores, 60% organically, which is greenfield, and 40% through strategic and accretive M&A. Nothing is going to change in terms of that planning. We added 10 stores organically this year. We communicated to the market we'll add 20 to 30 stores. I think we will meet that target that we communicated at the beginning of this year. And then we're still looking at supplementing it with M&A. We are having conversations right now with single, doubles, and some of the larger blocks. So if you supplement that, we will have more stores. And by the sheer nature of that, Anthony, will have more market share. If we're sitting at 11% today, my best guess is within the next 1.5 to 2 years, we could hit 15% market share in the country.
Big growth, to say the least. What do you think is the biggest thing you're learning amongst your consumers? Because you're at 44,000 elite members now. And, as you said, no, you couldn't really sell cannabis to people online, but now you've got a membership of over 44,000, 1.43 members of your Canna Cabana membership as well. So what's this say about Canadians in general, what their buying habits are, and what are some of the biggest, most popular feedback that you get amongst Canadians as to what you're doing or what's missing, I guess, in the market and how you're capitalizing on that?
Yeah, Shad, great question. So, numbers don't lie, right? We've got some great data from our 172 stores, and we've been leveraging this data quite well, not just by the sale of this data to our strategic partners, but also by reading and understanding this data on what it's telling us. And very quickly, we figured out that 70% of Canadian cannabis customer cares deeply about price. And we were perfect. We were already manufacturing consumption accessories abroad, and we had the seed to sale margins in that. And we said, now, how do we do that in cannabis when everyone else is buying cannabis from the same provincial regulator? And this is why, Shad, we bought these ancillary cannabis businesses so we could really position our core business of brick and mortar. We read into that data, and now we please our customers and our club members with the lowest price guarantee, with the largest selection, which we also learned by data that customers gravitate towards high selection. They want selection at the best price. They want a normal retail experience. They don't want to come to a store 3,000-4,000 square feet like some of my MSO friends are doing in the States, which I'd love to dig into with you guys. I don't know what's the benefit of that. You got to provide them a retail experience that they can submerge themselves in and build those baskets. So we've learned a lot from our data, and we're using it very, very well.
Yeah.
Well, let's talk about, let's talk about south of the border, since, you brought it up with the MSOs. So what would your entry, or what would the strategy be to kind of come into the US? Because you talk about price, and talking about price, markets such as, let's say, adult use conversion. So Ohio, markets like Delaware, Connecticut, you really, fighting on price is going to be pretty difficult. So, is it going into markets like Colorado and California and the Missouris and the Oklahomas of the world and bringing that discount model? What's the strategy there to come in and win the consumer in the US, like you've obviously won the consumer in Canada?
Great question, Anthony, and would love to dig into this with you. So look, I'm not going to lay out my entire US strategy. I hope I hope my track record speaks for itself, or HITI's track record.
I spoke to it in length on Friday. So
very cool. I will look that up, Anthony. But to give you, I would love to dig into this a little bit so you get a little bit more understanding. So look, I think we definitely have the second movers advantage getting into the US when the time comes. Real estate size and quality of competitors has been, how our competitors in the US are looking at real estate is completely not making sense to me. I've been looking at these stores. They're massive in sizes. We don't have that issue. My stores are 1,200 square feet, 1,500 square feet, but they generate $1,500 per square foot. I don't think that is the case with our MSO competitors. Maybe they have higher sales per square foot right now, but that is only because real competition has not sunk in yet. It's not a fully federally legal territory yet. They're also playing with 50% margin profiles. Here, we just hit a 9-quarter high at 28.4% gross margins, which make me very happy. And we're spitting out, $9 million in quarterly cash flows and have turned into, net income positive. So imagine all of this, plus our experience here in Canada. We have experience with Greenfield. We have experience with strategic and accretive M&A. You can see what we pay for when we buy these stores. We have 3 million US online customers. I'm giving you these high-level points without really getting into the deep strategy. We have 3 million US customers, which I alluded to in the beginning, that we can easily start converting. These customers are buying pipes, bongs, and vapes. We all know why they're buying this.
Yeah.
And we all know, what these big e-commerce platforms are capable of. Like Grass City and Smoke Cartel get 20 to 26 million site visits a year. Even if they didn't make me any money right now, they're strategically so important to have, and to have this customer base that we can turn on in certain states where online cannabis sales will be allowed, just like we have it here in Canada. Almost 70% of the Canadian territory we can now sell online. I think it'll be the same in the US when those big events happen, and we'll be ready for that. And then overall, again, I will just take you back to our track record. We went from $8 million to $500 million in just 5.5 years, right? We built consistent and strong free cash flows, rapidly gain market share, both organically and through strategic M&A. So, we feel that US will be no different. If it's at 55% margin profile right now, again, I don't want to get into the strategy too much. I see no issue at all. In fact, I'm looking forward to that opportunity.
Have you contemplated launching Delta 9 hemp-derived products in the States to cater to those millions of consumers that are currently on those lists? Because that would enable you to launch a full-blown e-commerce strategy that is compliant, to my knowledge, with the NASDAQ.
It's a little bit of mixed bag for us. So we do sell a couple of cannabinoids outside of your traditional THC through Fab CBD and New Leaf Naturals. But we have to be extremely careful. We trade on the NASDAQ, and every single month we get new opinions from our law firm in the US that we use. And, a new cannabinoid is banned and the next one is coming in. And look, at the end of the day, we need to focus on our core business. That is not our core business, although we are indulging a little bit in it. It's just changing by the minute. California got extremely strict on that very, very recently, and they're taking these cannabinoids out. So it's a game of cat and mouse, and we don't necessarily want to play this game, although we are currently looking at fortifying this cannabinoid spread in the US a little bit to fortify our e-commerce platforms in the short run, or just temporarily right now. But I am talking about the big games, Anthony, when federal legalization happens or a descheduling event happens, when we are able to open brick and mortar stores, we want to supplement that with our online platforms that can also sell cannabis products.
Yeah, that makes sense. We actually had a conversation earlier with an executive, and I think a lot of this is the focus for a lot of cannabis companies now. Let's not focus on the national footprint and be like a Walmart, and more like a Publix, which is more of a regional play. You guys have branched out Western Canada. You're now dipping into the Ontario market. We've indicated this before, the cap size increasing from 75 to 150. And I keep asking this question each time that you're on the podcast, but I like to ask it over and over again. These perceptions about the Canadian market, and even specifically the Ontario market, which has 14 million people. Like, what are you seeing as far as growth and trends that you've, I guess, learned over the past, say 6 months that gives you that opportunity to capitalize off of increasing your cap size to 150?
Yeah, 100%. So Shad, our same store sales are up 111% over the last 10 quarters, while the average operator in the country is down 10%. And we can thank this to the province of Ontario. In the province of Ontario, our average store generates $3.4 million. Our peer average has gone down to just $923,000. Huge difference. And then nationally, our stores generate $2.6 million as an average. Our peers are now down to $1 million. So we know that our innovative discount club model is winning. Ontario is now going to allow us to add another 87 stores in the province. We're sitting at 63. Conservatively speaking, if we do $3 million per store, you can do the math. We'll still end up with another $225 million in revenue just from the Ontario market. We're still going to add another 40, 50 stores in Alberta, Saskatchewan, and Manitoba. British Columbia is also considering a store cap increase, although they're not there yet. So when you couple all of this, our long-term strategy is to have 300 stores in Canada. I think we can get to $800 to $900 million in revenue from the Canadian market alone, which is a baby market when it comes to, in front of the United States. So California alone is slightly bigger than Canada, or the same size of Canada. So just imagine the opportunity we'll have in the US if we've learned to do what we are doing here in Canada. And I'll tell you this, we fought with all kinds of competitors. We've fought with the independents. We've fought with the smaller regional chains. 6 of our publicly competitive peers have gone bankrupt now. It's not easy to win here. And Anthony, I'm hoping you're paying particular attention to what's happening in this country, because if 6 publicly traded peers.
Oh yeah, I could name the tombstones of your peers. Trust me, I've paid very close attention to what you've done. I basically said Friday, Canadian retail runs through high tide.
But think about this. Thank you for those kind words, Anthony. I appreciate it very much. But just think about it. I don't hear many American operators going bankrupt yet. So we're playing in the bankruptcy world and producing these numbers. Hopefully that gives you some extra confidence.
Well, I will say you got quite the following. Tank Abbott writes, my wife is begging me to take her to the hospital, but I'm waiting to see what Raj says first. So there's the kind of following you have.
Tank Abbott is my absolutely other favorite barnacle. Okay. And I can name 10 more, but thank you so much, guys. Our barnacle army is the best.
So we are going to be down on Parliament Street later this week doing some interviews, going to have a walkthrough. So anybody that wants us, any kind of footage you want us to film, please let us know in the comment section below. But any advice when we show up to the dispensary on some of the things that we're going to anticipating to see, Raj, or any good questions that we should ask pertaining to the actual location itself?
Is Anthony going to be with you?
He is.
I'll be with Shad.
All right. So one thing I can tell you both is to pay particular attention to the way we do our displays. It's a very open and retail-friendly layout. I speak all day about our unbeatable prices, about our unbeatable selection, which you'll see in the Parliament store. But also pay particular attention, if you can, please, to our open retail layout, which our customers appreciate very much. Because you can actually, most of the stores in Canada, you have to keep, most people just pull the products from the back and bring it. It's kind of boring. That is not the case with the Parliament store. I think, Anthony, you'll appreciate it when you go there.
Cool. I look forward to it.
How far is that location from the distillery district in Toronto? Do you know?
I think it's literally 10 minutes. Yeah, I used to live in Toronto for 6-7 years. So it's from distillery district. It's about 10 minutes, maybe.
It's a booming area, that's for sure. I know they built a whole city around the Pan Am Games that came there probably 10 years ago. And since then, tons and tons of condos. As much as people are working virtually, that city continues to grow and grow and grow. It's massive. But high rises, I think there was 132 cranes just on the skyline alone last year. All the condo buildings that are going up in Toronto, and it's no signs of slowing down. So gives you a real idea of like what opportunity presents itself in that market alone. But listen, great job on the numbers. Always have these interviews are pretty easy to do with you every quarter to highlight some of the numbers that you've done. But I think on behalf of Guap, Anthony and I, and the whole crew that's big investors and followers of this space, keep up the great work.
Thank you so much for having me, guys. Really appreciate it.
Yeah. Thank you,
Raj. Appreciate your time. All right. That was great. Hey, he knows his stuff. You ask him a question and he is ready to answer. He's got everything buttoned down. So,
I mean, I said it when we went over the earnings, man, the fact that the velocity that they've grown and they've done every single thing that he's laid out to do with the business. I mean, it's a testament to being able to set a roadmap, set a vision, and then go execute on that. And unlike 90% of the companies that we've seen in cannabis, I mean, Raj has executed and he did what he said he was going to do. And he continues to do what he said he was going to do.
His average store is 3.4 million in Ontario.
He did. The average was 3.4 million of his stores, and the average of his competitors was around 900 grand.
That's a big difference. But
he's right though. Price wars in cannabis is how you win the consumer.
Yep.
Like, we know it. I know it. Guap knows it. Anybody that's purchased cannabis, I mean, knows it. That recipe of the memberships paired with aggressive pricing, it obviously works. Like, he's smoking his competition, no pun intended, in the GTA with those numbers.
Yeah, if I could jump in, I remember it was a couple years ago, Fire and Flower reported 42 million in top line revenue, and High Tide did as well. And we were all, hyper analyzing the business, and they had the backing of Couche-Tard, and I was betting on High Tide, and I just, and now Fire and Flower is no more, and they're reporting, free cash flow and positive net income while on the NASDAQ. If you believe,
Rest in peace, Fire and Flower.
If you
I was just
subscribe,
going to say,
RIP.
RIP.
If you subscribe to what Anthony Caniglia was saying before, which was sort of not a great sort of like very optimistic in terms of uplisting soon here. Here's a company that it is not reliant on U.S. reform, that has $1 billion runway in Canada, and that's not talking about U.S. or Germany, which they're looking to expand into probably even before that. So, that's why I'm a fan. And they're not relying on, they're not growing. They didn't get caught up in the LP, cultivation trap. So
no, and I mean the good thing is too is the Canadian markets. I don't see it going back in terms of growth. Like the Canadian markets, it's up from here. I mean, there was a 10-car pileup. There was massive carnage, and he's winning on the back end of that. Yeah, well, I mean, it's just going to get better from here.
Yeah, I think so. And we're going to learn a lot because once we're done at High Tide, we're actually going and doing an interview with the Attorney General of Ontario, Doug Downey, to learn more about the legal work in Ontario right now, what we've learned, where we are today, most importantly, where we're moving forward, and just the job creations. But most importantly, I think people that live outside of Ontario, they probably want to get an idea as to like, what are some of these misconceptions that this market has right now? And what's changed? Because I know a lot has changed. Man, I was just talking to some people about the cannabis space on the weekend, and they're like, well, what's a good stock to buy? Like Aurora? And I'm like, man, these conversations that people, and I think a lot of that has to do with the Ontario market too. There's probably a lot of perception out there on how people view it, but at the same time too, a lot has changed. We're in 2024 right now, and we learned or hope to learn a lot more about, what the current landscape looks like. Mungie Boy, appreciate the donation. This is for Anthony. Go buy a High Tide white label joint. When you're in Toronto, we will convert you into a High Tide barnacle.
I will get that and post a picture of it on Twitter. You can be damn sure of that.
They have a few private label brands. I would love to hear what you think, Anthony, for sure. But yeah, they're also just, selling what sells, right? So they are sort of at the mercy of what the LPs are putting out there. But I definitely want to hear Anthony's opinion on that.
Tank Abbott, yes, there's a lot of live viewers on here today, and I know there's a big following with the High Tide people, but that's great. So, all right, you are on a plane tomorrow morning. I'm on a plane to Toronto, so we'll be there. We're going to actually we're trying to figure out where we're going to get some space for a live stream on Wednesday. Special note.
So,
go ahead.
I don't think you realize it's a banking holiday in the U.S. on Wednesday.
Oh, is
the stock markets? The stock markets are closed. It's Juneteenth.
Okay. So if we don't do a live stream on Wednesday, you guys will know why, but we'll let you know on our community chat group on our YouTube channel, probably latest by 11 a.m. on Wednesday. We will be back on Friday. We are flying back Friday morning, but I wanted to give you guys all heads up that the live stream will not be at 11 a.m. this Friday. We're actually going to do it at 4 p.m. So I will probably be back at that time. It'll be cutting it close with Anthony, but if not, Guap and I will get the show on the road. We'll figure out who we're going to have guest-wise, and we'll go from there. But as we said, later tonight, we're having a conversation with the Cannabis team, their executive team. That video will go live 4 o'clock tomorrow with both Jesse Channon, the president, and their CEO, David Hart, to talk about today's press release this morning about exiting Florida and really another step in the direction they want to go as far as where this company is going to focus on. But notable markets, as you indicated, Anthony, earlier, Ohio, Pennsylvania, and Virginia. So that's our key markets. Plus they're in I think they're in 13 other markets, if I'm correct.
It's 13 or 14. They're in a lot of markets.
They're in a lot.
They're in a lot of markets, and I would just be also willing to bet that Florida is not probably the last divestiture that you're going to see from them as far as trimming the fat.
Be a regional player versus a national player. I think that's key in the early stages of this industry, especially in the U.S. market. So that's coming up tomorrow at 4 o'clock as well. We've got 7 things that you need to know about TerrAscend. That's coming out. And if you haven't done so already, make sure to log on to thedalesreport.com or the link in the comments section below here and subscribe to our Baked In newsletter, because we have our full equity research report on those 7 things and comparables with TerrAscend. So if you haven't done so already, make sure to subscribe to our newsletter and get access to all that information, which would be tremendously helpful when trying to figure out where TerrAscend is and things that you should know about, including 7 things. Gents, meantime, enjoy the rest of your afternoon, and we'll let you guys know if we're back here on Wednesday. If not, definitely back here on Friday at 4 p.m. Enjoy the rest of your afternoon.
Go Panthers.
Go Panthers.
Go Celtics. HITI Fun City.
Hey everyone,
do
thanks
it.
for watching our latest podcast. Lots of momentum building. You guys getting all excited? Leave comments below. Again, we want to take this viral. Smash that like button and make sure to click on that bell for all notifications as we start to bring on bigger and bigger guests. Don't forget to subscribe to our daily newsletter, the Baked In newsletter, by logging on to thedalesreport.com. And we want to take this viral, as I said, and make this community grow. So make sure to subscribe on that channel, because we wouldn't be here without you. Thanks again, everyone, for watching.